Hello and welcome to Commodity Champions. I'm Manisha Gupta. The crude prices continue to remain in headlines, holding above $90 per barrel as worries of tight fuel supplies ahead of the upcoming European winters intensify. Russia cutting off gas supply to the continent has only further compounded these worries. However, concerns of lower demand from China following strict lockdowns continues to weigh on prices. This, in addition to a rise in interest rates in US and Europe, have resulted in contradicting fundamentals, which are triggering the current volatility in the energy space. The crude prices continue to have support given that there is a hurricane season in Atlantic, sanctions from the European Union on Russian oil, and December 5 and a further output cut from OPEC Plus also remains as supportive factors. This volatility has also weighed on the prices of other commodities. So what lies ahead for the energy sector and how will this continue to impact other commodities and asset classes? Joining me now is Vandita Pant, the Chief Commercial Officer at the BHP Group. Thank you so much, Vandita, for joining us on CNBC-TV18. And first up, the first question, when you look at the commodity, what is the way that you see the US dollar and the rate hikes and the overall macro picture impacting all of these?
Very glad to be here with you, Manisha. The macro has a lot going on, as you said. There is, of course, the interest rate in the US and whether the balancing of inflation pulls and pushes land softly is one issue, but equally the issues around volatility, geopolitics, etc., all coming into making it quite a volatile macroeconomic background. And I think of it in a particular way, which is, are we getting into slower growth for rest of world? And I'll explain rest of world going forward a little bit than what we thought was the case earlier in the year. Absolutely. However, I do think that over a period of time, over 12 to 18 months, China, interestingly, can be a source of stability from the world growth perspective, because that's one country where the inflationary pressures are not there, is a very important one for commodities, of course, and has all the levers, fiscal and monetary, to start to stimulate the economy, which, of course, is a very big end use. So I would say volatile background, macro, globally, absolutely. We don't think it is at a cliff, though, and US can really escape the fate from a recession perspective. But in China, in 2 quarters or so, can start to become.
And when you talk about the second quarter that China could see a turnaround, on what basis do you see that happening?
You're right. In fact, Q2 for China was quite weak. What was interesting, though, was that the end-use sectors got impacted because of lockdowns, etc. But the industrial customers that we have, for example, steel mills, continue to be quite strong in terms of their utilization rates. Blast furnace rates were upwards of 80 still. Now, going forward, what is very interesting is we already see some green shoots of growth coming through. Which are those sectors? Those are infrastructure as well as auto. EV sector has been stimulated with some subsidies, incentives, and a sharp turn up on the growth. Infrastructure, which is absolutely a critical and a very big sector in China, already showing real growth. Now, the big sectors to look at here is housing. And for housing, a few interesting policies already in place now. Mortgage rates down more than the rate cut down. China Development Bank talking about being really focused around the housing availability for the country. So that's a signal. And thirdly, there's been a proposal about setting up an entity for highly leveraged developers, which could really unclog the credit pipe from the banks as well. So given all that and the fact that stimulus toolkit is rather wide for China, we think that it takes a quarter or 2 quarters, because it does come through a lag in terms of impact, that we'll start to see that in housing. Of course, I have to caveat my comments on all of this being subject to no material COVID-related lockdowns happening.
Fair point that. Vandita, I was also going through the latest earnings from BHP, and those are great numbers, by the way. Do you see them sustaining, though?
We do. So what is very interesting, as you said, Manisha, very, very good results financially, operationally, and safety-wise. 3.5 years of no fatalities. Financially, as you said, very good prices for our commodities. Of course, that tailwind was there, but we have managed to capture all of that tailwind in the bottom line by having real, reliable operations. Record production for third year in the running for our iron ore asset. Record mined material in Escondida in Chile. Almost near record in concentrator throughput for Escondida as well. So what that essentially means is that our operations are really running reliably, and that excellence is being captured through the financials as well. Record dividend this time with the $16.7 billion of dividend over 12 months. And I see it as a sustaining advantage that we can continue. I have procurement which reports into me, and really being a lowest cost producer and having that cost discipline will become critical. And we have delivered that, and I think we'll deliver it sustainably over a period of time.
Sure. Vandita, also talk about BHP in India, because I understand you have various interests here. There also is an FTA in place. What is your sense of where India stands on the map, and how are you looking to accentuate what's already going on with you and the country?
Yeah, India is a very exciting partner and customer for us, Manisha. In fact, India has been a very big and strategic relationship for us for a very, very long time. And to give you an example, India's trajectory in terms of steel production, for example, is a positive one and will continue to be for decades to come. So we have had, 118 million tons of steel production last year in India. This year, it's already 8% plus run rate with the 127 million tons. And I know the ambition for the decade end is to go to 300 million tons per production capacity for India. We think of it as 3 times India's steel production goes from where we are to 2050. And that trajectory is something we can really contribute to with our metallurgical coal, which is an essential commodity for steel making to India. And that's something we have highest quality coal, and hence with our steel customers in India, almost any steel mill that you talk about, our high quality met coal is part of their core blend. 35% of India's metallurgical coal, which, as you know, India does not have its own endowment in the country. 35% of its requirement comes from BHP. And equally, almost 35 to 40% of our met coal goes to India. So that's a strategic, real partnership. And as you referenced, it's a partnership which mirrors India and Australia's FTA efforts as well.
All right. Let's move on to specific commodities as well. And what's your sense on the prices for steel, if you can talk about that? How do you see India doing in sense of incremental demand growth in this sector?
Yeah, I would refrain from directly making a reference to prices, Manisha, if I may. But what I can say is, from a demand perspective, India, for taking steel into account, for example, as I said, we are forecasting around 8.5% growth in steel production this year for India versus last year. We do think that 300 million tons of India's ambition for the end of the decade sounds very ambitious, but even if you were to haircut it by 10% or 20%, we are still into 250 million tons, which is a massive increase of growth. And by 2050, India could very easily be at a stage of 400 to 450 million tons of production of steel. That, in a market which currently is 1.8 billion tons in the world, makes India one of the absolute leaders in steel production. And I would say from a numbers perspective, we still think even in short term to medium term, India's tailwind of pent-up customer demand, consumer demand, is very much there to support the trajectory of growth, which is yet to play out. Of course, the short-term challenges of making sure that the global financial conditions or indeed the balance of payments issues and international competitiveness continues to be a focus and managed well.
All right. I have one final question before I let you go. And what would you see as concerns going forward? Because we still have a war going on. The interest rate hikes are still happening. So is the concern or uncertainty that we are seeing in China, the high power prices in Europe and China, the drought. I mean, you name it, and there are so many concerns. What are you watching out for?
So I would say Europe continues to be a concerning region. Of course, given the Northern Hemisphere winter coming in, energy challenge will be more acute. And that does mean that it already flows into the industrial activity in that region. So that region is one of the weak spots, if I can put it that way, overall. Overall, we would think world growth at 3.25% next year is very much doable. US slower growth, absolutely, but we can also see that a peaking of inflation happening in 2 quarters' time in the US. What that does mean is there will be structural inflation which continues for this decade, because it's obviously a fact that this decade is going to be higher inflation than the previous decade view. Of course, at a one level, I would say recession talk, especially in the US, is a bit of a moot point, where economy is almost at full employment. And as you know, growth for growth's sake is not really the point. The issue being, if there is full employment and the demand dynamics continue, we wouldn't call it a recession economy at all.
All right, that point is well made, Vandita. As always, thank you so much for joining us. On that note, it's time to go for a break, but don't go anywhere. We shift focus to India's rising sugar consumption in a discussion with Vandita Pant Dev Gill of Merix in moments from now. Welcome back, and you're watching Commodity Champions. We've spoken about crude, but we will shift our focus now to sugar and ethanol, which also seem to be in a sweet spot with consumption in India and outside. We are now looking at consumption per capita in the Indian markets also on a rise, breaching the 19 kg per annum mark. This is slightly below the world average of 21.8 kgs. However, it's not just India. Globally, it's going to be a second straight year of recovery in consumption. Moreover, the world production is set to rise, with output from India, Thailand and the European Union likely to be on the higher side, offsetting any significant declines in China and Brazil. Meanwhile, volatility in the energy space continues to weigh on ethanol. So what does all of this mean for the sector? Joining me now to take this discussion forward is Vandita Pant Dev Gill from Agri Options Broker at Merix. Hi, Dev. It's been a very volatile agri and non-agri space, really. And we were just talking about the energy concerns that we are looking at, not just in Europe, but in China as well. How has all of that impacted ethanol as a sector?
Yes, certainly. If we look at the macroeconomic space, specifically crude oil, obviously very timely given the segment just before me, we've seen a real adjustment in terms of expectation of global crude oil prices, and that continues to take place for this year and next year. Obviously, you've got OPEC, who will provide us some updated S&Ds in terms of the global balances today. But ultimately, all of this has sort of weighed on ethanol prices in Brazil, which have in some ways been a drag on the global sugar price. One thing we would caveat, though, in all of this is, whilst it's changed or been a drag for the world benchmark price, it really is quite immaterial for the Brazilian sugar production, because we have really been working on an assumption of max sugar flexibility or focus on sugar production away from ethanol. But if we do look at the benchmark figure and the parities, on the one hand, we have in Brazil sub 14 cents as the ethanol parity, and yet the Indian break-even for sugar exports is above 19 cents, subject to EROs being issued by the Indian government for the next crop. In the meantime, domestically in India, ethanol prices are sturdy, and we expect that the ethanol diversion, i.e. the amount of sucrose that is diverted to produce ethanol, moves from 3 million tons in the campaign just ended to 4.5 million tons in the one that will begin.
So, Dave, looking at the prices, then, I mean, as you explained in detail there, what is the sense that the markets can make? Because last year, clearly, India has seen an all-time highs in sense of exports. This year, at 80 lakh tons, clearly quite below on what we did in the last year. But are the prices going to be supportive?
Yeah, I think, India, for our perspective at least, is going to supply a lot less sugar to the world market. So the market looks at 8 million tons as an expectation, with potentially the government coming out later this month to itemize that, and that could come in 2 different tranches as well. But essentially, it's more than that, would reflect more than 3 million tons less than last year. And again, that sugar really, basis where domestic prices in India are at the moment, shouldn't really flow out below 19 cents. So that, in essence, should keep world sugar prices supported to some degree. Meanwhile, consumption, as you've alluded to, in India has bounced back. We assume, I mean, ISMA yesterday had an increased markup in consumption. We can believe that will continue to be the case, where we'll see consumption up to about 27.5 million tons. And again, that means that the dynamics for the domestic economy or the domestic markets for sugar within India remain balanced and firm, whilst the ethanol demand is also fairly steady. Incentives very compelling for Indian producers, and therefore year on year the increase diversion from sugar production to ethanol will continue to take place to the tune of 1.5 million tons over the crop that's just finished. So I think we will continue to see a continuation in this move to produce more and more ethanol amongst Indian producers.
All right, fair point. Yes, there's a lot of rush and a lot of incentives to produce more ethanol there. It is something that you can do year-round, as well as we've already have witnessed in the last couple of years. But Dave, let me come back to Indian consumption then, and the numbers that I was looking at 19 plus per person per kg per annum. How do you read those numbers? Are the global consumption numbers, have they also shown a growth?
Yeah, I mean, certainly we've seen some benefit. Obviously, all these year-on-year figures are all afflicted by the reduced out-of-home consumption due to COVID cascading into 2021. We do believe that it will continue. Obviously, a lot of that's fed into the Indian statistics because India is a robust economy, and that trickles into all different parts of the demographics and the consumers across India. So that's part of it. We do see it continuing as India remains a powerhouse of the world. In other parts of the world, absolutely same thing. So yesterday, again, Thailand, year-on-year, August domestic consumption up 8.6%. That again is massively powered by improvements in consumption due to Thailand being suffering from lack of tourism and heavy lockdowns this time last year. But we do see it continuing. Globally, though, more modest. So we pencil in 1% annual consumption growth, which is around 2 million tons. So that reflects partly the fact that not all economies were impacted so much by the impacts of COVID, but also the fact that not all the economies are growing so quickly, and we do have question marks over the consumer discretionary spending out of home going forward in this potentially recessionary period in the UK and the EU, for instance, going into Q3 and Q4 of this year. So a little bit more modest in the non-emerging market countries.
All right, so we're going to be eating more sugar, and so is much of Asia doing that as well. Dev, as always, thank you so much for joining us. So 1% of global demand growth in sugar, which is 2 million, but a much higher number when you look at the emerging countries and especially India, where we are looking at almost record consumption in case of sugar in this current season. But with that, that's all the time that we have on this edition of Commodity Champions. Thank you for watching.